Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, y'all. Ira Epstein of Linn & Associates with your financial market update, and this is for Wednesday, the 24th of May, 2017. We haven't seen yet the settlement price in the NASDAQ, the Dow, and the S&P because it's just around 3:07 p.m. We'll be there in about 8 minutes, but looks pretty good that they're going to stay up. Now, what took place today is the market was ultra quiet until 1 o'clock when we saw the FOMC minutes came out. When they came up, you got a rally in the NASDAQ that began. You got a good rally in the Dow. You had a nice rally in the S&P. The gold market's going to close, settlement price, at $12.5310. It is up $4.50 since that came out at the expense of the dollar, which fell, and the bonds and the notes, which are getting a boost, a rally off of it. And what took place is when you read through the notes, they are certainly not as hawkish as the trade might have thought. It looks as though there's still going to be a June hike, but anything after that is very much in question. The Fed questioned wage inflation. They're not seeing it, and they're questioning consumer spending and consumer price inflation. So lots of questions that came out. You don't have to understand it all other than to understand the one thing, how the market react to it. And the market is reacting in a way that it's not saying that we're going to get a lot higher interest rates immediately ahead of us. Interesting. Remember, tomorrow's OPEC day. You're going to get the announcement there. Then you're going to have in the natural gas ideas of the weekend weather and how you look past the Memorial Day. That's going to be important. Grain market's a bit of a rally today as well. So let's first go to the Dow and see what we've got here. We have a market that's gone back up, and it's at this resistance zone. Now, the previous high back here was 20,995. You went through it by a tick just now, and you're hanging around that area. The old highs, and this is a weekly chart, were really 21,010. When you come to an area chart of closes, you came down, and I guess now I'm waiting for the close, but I'll be able to say that now you're out of the down thrust that we had into an up thrust if the market hangs in here in the remaining minutes. Remember what I said about this area of resistance. Is the market going to sit here and respect that or fall back? Now, there's many things to happen. We have to wait and see what it does. Until it does it, it hasn't done it. I'm going to hang in my hat there that we still have resistance. It's between 20,996 and 21,010. You need a settlement over this to get a breakout. Yes, you can get over it intraday, but if you were to get a big break afterwards, it would still count as a resistance area. Close over it, now you got to get rid of this chart line, and now you're into something else. When you take a look at the swing lines, they're very clear. So today's high is going to take out 20,995. Guess what I'm going to do for you tomorrow? I didn't want to change this today. I want you to see how it's all going to work. I'm going to be taking this and having an up arrow pointing. So we're going to have one number that came down and a blue line. Actually, it'll be this arrow that disappears. And you're going to have a blue one pointing up because you've now got a higher high. So you're out of the downtrend on the swing lines. Where's the battleground? 18-day average of closes to that high right through there. Where's the next resistance? Well, if you can extend, it's the upper Bollinger Band. This one break was cause for people to wonder, would this market be able to come back from these type of breaks? As you can see, nothing seems to be holding the stock indices back. You are overbought. You can't get away from that. So I don't jump in and say, oh, in my mind, oh, you got a breakout, you took out those highs, you should be buying. No, it'd just be the opposite. I'd be saying, you get up to an upper Bollinger Band, it's not a spot you buy. It's where money comes out of the market. I wouldn't be surprised to see that. When we get to the NASDAQ, the market today got to 5734.5. Now, the one thing I have been ultra consistent on is calling this the poster child of the bull cycle. and it is. It's now made a new all-time high, and it looks like it's going to give you an all-time high close if it can just hang in here. It also is knocking on the door of resistance at 57.44, and if I were to take the name off the chart and you just look at the chart, you'd say you're overbought at an upper Bollinger Band. You're not supposed to be buying into that. That's how I teach in my charting course. Doesn't mean you can't do different. It's what I teach. You never heard me say go short, by the way, did you? I'm not saying that. I am also looking at the S&P, which has a lower low, and then today's high of 2404 did not yet take out 2404.5. Now, I don't know if it will in the last few minutes here or not, but so far, so good. It hasn't done it. Should the market close back under 2388 and not take that number out, you could end up with a market with lower highs, lower lows into a sell signal, and we'd see if the market was still overbought. It hasn't done it, so there's nothing to do with it. In the Russell, this is the resistance zone. This is where the pros are selling. If you had access to my morning videos, this is just what I told my traders. I said, I think the pros are selling this market here. I'm not keen on the dollar risk because you're not wrong until you're over $13.99.20. And when you count that, it's a big risk. It's about $750, $800. Remember, they changed the value of this to $50 each full point rather than 100. So when the market goes from 1380 to 1381, not from 1380, 60 to 70, that 100 points that make that up, that those tenths, are equating now to $50, not 100. In the VIX, another number that I threw out to people this morning and said, watch, you got to keep your eye on this. If you take out 1018, you're probably going to see the stock market take off. And that's exactly what happened. So this bull pattern is done too. I'm going to be taking this arrow tomorrow, pushing it and showing it down. Every now and then I like to do a chart where I haven't done it yet for you, and you get to study this and see the differences I'm throwing in. Then we get to the bond market, which is overbought. It has a pattern of lower highs, lower lows. It is certainly not in an uptrend, but it is over the 18-day average, so it has upside bias, and momentum is still up, but overbought. In the 10-year notes, you stalled right here under 70. You're no longer in an oversold condition. The swing line, though, has a pattern of lower highs and lower lows. So you're not in an uptrend, yet you have upside bias because you're over the 18-day average of closes. A real nothing market. The dollar index, how many days under 20? So today, yesterday, both numbers under 20, and the day before. Game over. Now you have what's called an embedded reading. Until the red line crosses back over 20, the market is said to have converted from oversold to locking in a downtrend, and lower prices are typically, not always, I can only use the word typically, I don't have a crystal ball, in the offing, and you're developing the bullish embedded reading in the euro currency, which is saying, okay, we had a small correction, but this market's still looking bullish, not bearish. British pound, the market got under 129.43, so it's got lower highs, lower lows, but it came back, and it's going to look like it's going to settle over 129.50, which puts it totally neutral. Swing line down, but bias up because you're over the 18-day average, and momentum's pointing down. A confusing chart. Japanese yen, swing line down. Lower highs, lower lows. So we'll call the trend down. The bias is up because you're over the 18-day average of closes. There's big confusion in this chart because the 18-day average just got under the 100 and prices are over both. That's an unusual circumstance. And you're flat in momentum. Last, in the energies. Market got up to a new high for the move, 51.88. Looks like it's going to settle the day lower, but it's got an embedded reading. It's bullish overall. The question is, how do you go through the OPEC announcement tomorrow? What's it going to say? Is it still what I mentioned to you? You get up, this was the buy the rumor rally of an extension, 9 months, and you get it, and does the market react the other way to it? I don't know, but I don't want to find out with money at risk either. In the July gasoline, embedded reading. So pullbacks in this market on this chart are still buying opportunities. The question is, of course, OPEC and what it does to the markets. And you actually settled in the natural gas at 330. You held the first challenge of the 100-day average. And as I said, I thought yesterday the market's going to fight in between these numbers. It's exactly what is going on. Momentum is still down. The swing line is up, but price is under the 18-day average. It has no real direction. Everything's fighting with each other. It all gets bullish again if you close over 334. It gets bearish if you get under 325.60. So I wait to see which way it's going to do before making new decisions in the marketplace. You know, you see me talk about all this. How'd you like to learn to do it yourself? Got a week or two to put in, say, 15, 20 minutes a day? You don't have to do it day after day either. You can get an hour. You can go through more chapters. I've created 54 video chapters for you to look at. They take you through each step of what I'm doing here, plus they add to it window envelopes and a lot more secrets that I don't divulge in these type of videos on trade ideas, how they work. Now, I've been adding secretly some new things. I'm creating a trader's library. I finished MACD. I've done pivot points. I'm going to be adding more and more of these type of vehicles that people use day to day to work with the markets. I already in my course teach slow stochastics, but what about relative strength? What about some of the other indicators, the Chalkin indicators? I can go on and on. There's so many to do that I'm creating a video library of them, and I'm going to figure out how you get access to it very shortly. First, I want to create a few more of them. But would you like to learn how to do this? Well, here's how it works. You get the videos. The videos come with the course. The course has 1 month access to it, including charting software, including my daily research. So for 30 days, you get access for $99 to the charting software, a $100 value, my research, which is a $60 value for 30 days, and all the videos in there. And if you need more time, we have a way to make that available as well for you. So we put this together with the idea you should be able to get through this course 2 weeks, 3 at the most if you put your time to it. You want to take longer? That's up to you, and we'll accommodate it. How do you get this? Well, you buy it. You can call us, do it that way. If you go to my website at www.iraepstein.com, go under the word education to purchase the course, but you'll see facts questions about the course, the charting software, how it all works, how everything plays together. You can also click right up here if you're watching me on YouTube. That'll take you right to that page to do the same thing. Away you go. Here's the one guarantee I can make you. I'm going to keep raising the price of this course. It's very popular. People like it. It's online. There's no DVD to mail to you. It really is a complete course. And if you give it a chance, it's going to give you some ideas about trading disciplines that maybe you can incorporate into your own methodology. One more key factor. I believe it works in ETFs, stocks, futures. A chart is a chart. Why do you trade it differently? With that, I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.